Anyway,
Yeah,
my battery is pretty low. Kirk, can you recharge me? It's great to have you back.
yeah. How are you doing? Should I
I'm
have
doing
my
a.
video on? I'm not real good with
That's yeah. Go
morning.
yeah. That's fine.
I have
That's
some
fine.
stuff to share with you if you'd like.
Yeah, great. I see you're pretty active, Kirk, on uh, what is it, Periscope or the Twitter streams,
Uh,
X. No?
yes, I've been on Stocks on Spaces. It's an
Yeah,
X program.
yeah.
Yeah, I'm not in love with with any one platform, but I do what I can to try to stay out there.
So, how are you handling the recent turbulence? Do you think that it's, just going to, we'll just get through it, or are things changing?
I think that, and I wrote this in an article that should be published on Seeking Alpha today, that the what I call traders' narratives, are so short term in nature that if you back away from them, it's easy to see that they're usually wrong. And and I'm not saying anything about this service or any other service. It's just that there's a stampede of traders in one direction or the other, depending on what's going on in a particular week. And I'm an investor, not I don't do a lot of trading, although I'll tell you a trade that I did do. And I think that people need to take a step back, see the forest for the trees. There's actually a pretty good service out there called that by Luke Roman, and understand some first principles. And the first principles are these: one, the United States economy is the most important economy on the planet, and it happens to be, for the big countries, the strongest economy on the planet. Our ability to influence things around the world is unmatched. And to think about the dollar in a way that you might believe that it's going to get destroyed or fall off a cliff is the wrong way to think about it. The way to think about the dollar is that it is managed in a range uh, that will help the United States either quell inflation at home or drive economic development everywhere. Right now, and I'm going to pop up a chart that I've been keeping for a long time. The dollar is coming off of a peak, and it's working its way towards an area right around 100 on DXY
Yeah.
that I've been calling the millennial dollar. If you take a look at the demographics, and that is what drives economics, our demographics. I think anybody who hasn't figured that out in the last 30 years hasn't been paying attention. But demographics drive the big overall economic picture globally. Young nations with technology, with rule of law, with resources do the best. And when you start taking away things like resources or technology, or you have an aging population that weighs on the dependency ratio, they do worse. You can take a look at every country out there and you can break it down by those handful of factors. And what you find out is that the United States is probably in the best spot, at least for a while longer, because we have the millennial generation, which is now larger than the boomer generation, driving the economy, and they're just entering their peak earning years. The Gen Z generation is a bit smaller, and what we have to hope is that, and there's a big glut of kids that are young right now. We have to hope that the United States can keep its population up so that we can not have to run into the dependency ratio issues that everybody's afraid of and which have been driving debt in the United States. If you take a look at the dollar here, you can start to see that there's two potential ranges.
What's
Uh,
the dependency?
what is the
Uh,
dependency ratio?
yeah, what
So
is it?
think about all the people in the United States that are going on Medicare and Social Security. So it's the
Okay.
ratio of people on government social
All right.
welfare programs versus how many people are working, and really what GDP is.
Okay.
So there's a lot of nations where that is, their budgets are just becoming too big for what their economic output is. So there are only a couple of things you can do. You can do austerity and have yourself a nice 10 to 20-year depression, or you can try to deflate away debt and grow the economy fast enough so that you can create the tax revenues to pay all the bills. And in the United States, even though I look at things from a Keynesian slant and Luke Gromen looks at things from an Austrian stance, I would say that I agree with him, and I have agreed with him for a long time, that the United States has to see growth expand and for asset prices to go up so that when people sell their assets, and there's a couple tweaks in the tax law that should be made because there's a lot of tax avoidance. But with higher asset prices, we know the tax revenues go up. There is a direct correlation. That's the one chart I didn't have for you today. But as tax revenues go up, you can pay your bills. And what we are going to see is the government and the Federal Reserve and Congress create a situation where asset prices continue to go up. Now, the Austrian or austerity crowd that comes from there would say, no, just tighten up all the spending. And the problem with that, and you can see it everywhere that it's been tried, you can go back to Germany, you can go more recently to Greece, is that austerity leads to depressions, and they are not one-time fixes. They are problems that take a generation nearly to overcome, and very often lead to violent conflict. So whether it's at home or there's an actual nation to nation or world war. So what you should expect is that the Federal Reserve and the Treasury are going to loosen up on financial conditions. They're going to allow the dollar to weaken a little bit to the bottom of its range, whether that's down around 90 or lower. It could go, but I think right around 90 is about where you'll see the dollar put in a
Okay.
low in the next
That's a
year
big
or two.
move. It's a
It
big
is a
move.
big move. And for the trader, understanding what it takes to drive asset prices higher so that we can pay the bills is important. And
Kirk, I want to ask you a question. Maybe you have the answer. A lot of people don't. So, one of the platforms of Vance is we need a weaker dollar so that we can export more. And, just because people want something doesn't mean they're going to get it. How do they engineer for a weaker dollar should they take control? How do you engineer it? What do you do? Just
this
rate? Is it all rate driven or what?
and QE.
Okay.
Yeah, I
So
mean
could it be
the
intervention or can you just come up with, I remember when countries would just have an overnight devaluation of their currency.
we're the
Did
United
that
States,
happen?
not in the United States.
Okay, good.
No,
You
in the
always make
United
me feel
States, well,
better.
no,
You always
no.
make me feel better, bro,
Yeah, no,
about
the
it. Because
dollar is
I
like
hear,
Doritos. The dollar is like Doritos. We'll make more.
okay,
Yeah.
all right.
I mean, anybody who gets on the whole dollar devaluation thing from the standpoint of just waking up one morning and saying it's different
That
is
shift,
well,
that
yeah,
shift.
and he's been wrong forever.
Yeah,
So, I mean, yeah, gold has doubled in the last you know,
yeah,
12 years. But you know what? Well, you know what's gone up more than gold? Yeah, almost everything. So, I
yeah,
stole one of his analysts. His analyst laughed at him. So,
yeah.
the idea that we're just going to devalue the dollar is silly. Now, what's not silly is that in 2029 and 2030, we are going to be at maximum boomer retirement. So the last boomers get on Medicare, and almost the last boomers get on Social Security. There's going to be a handful of boomers who, don't take Social Security till they're 70. But for the most part, Boomers will be on Medicare in 2029. That'll be maximum Medicare dependency. And most of the boomers, almost like 90 some odd percent of the boomers will be on Social Security by then. So that is 2029 and 2030 is the peak of what we have to spend on the boomer retirement. And from that point on, it flattens out and then goes down. Why? Because what happens to people in the long run, we're all dead. So between now and about 2030, there's going to be volatility because you're going to have competing forces of austerity voices fighting with the people who say, yeah, we need to just keep printing money and keep having things go up. Now, in the last 2 years, we have not been printing money, correct? The M2 money supply has come way down. And that is unusual, but it was coming down off of a gigantic peak. And that is something that I don't think everybody understands. When you see the viral images on X or wherever you see them now, is, you know, you have this, oh, look, the M2 is falling more than it ever has, and therefore we're going into depression. Well, no, because when you take a look at where it came down from, that huge peak, which you guys just talked about from COVID, you're like, okay, we started at an unusually, unprecedentedly high level, and now we're just basically getting back to level. In fact, I can show you M2 if I am good enough to find it. Here you go, M2 money stock.
So do you attribute this correction in the market has been, you know, people will say, you know, it was the yen carry trade unwind. Is that your
Yes,
take on what happened here?
so there is a big rotation going on for sure. Japan, which is the real good comparable for the United States for the next 20 years, is what they did is they had QE forever, right? And
Yeah.
now their demographics, their dependency ratio is finally flattening out, and they're trying to figure out how to navigate going from increasing dependency ratio, more people on the dole, or on benefits, or on entitlements, or on social welfare, whatever you want to call it from your ideological slant. And now it's flattening out. So Japan is trying to think, well, so does that mean that we stop buying our own ETFs with government money that's been printed? Do we raise interest rates a little bit? And the answer is a little bit. However, it's a generational thing. It's going to take a decade to maybe 15 or 20 years for everything in Japan to kind of normalize from this gigantic demographic shift of getting older that they had. And it becomes a drift rather than a curve. The same thing is going to happen in the United States, but it's not going to be as pronounced and it's not going to last as long because, again, we have that millennial generation behind the boomers that is going to generate a lot of wealth. And ultimately, the boomers, they start to die. So
the millennials end up with it anyway.
Yeah. I mean, I talk to my millennial friends, and they, I have paradigms for or kind of 30,000 foot overviews of each generation. And I will say the millennials who grew up in a pretty good time in the 80s and 90s walked into in their early adulthood 9/11 and the financial crisis and QE and all the things that weren't in the history books, right? Everything that they had studied, everything that they had known changed as young adults when their final hard wiring was, going in their 20s. And now they're in their 30s and 40s and they've worked, but they have kind of become a cynical, passive aggressive generation, but they do generally keep their eye on the ball. So I don't worry too much about the millennials other than the whatever it is. There's a million millennial men who have never worked full time and they're all schmucks, but the rest of them are pretty good, especially the women. And I think that they are going to charge more for their services. You've seen that the way they jump jobs for more money. And I think that when they take their inheritances, because I think a lot of them are going to inherit money. We know trillions of dollars are probably going to move. I think they're going to. I think they're going to be pretty good stewards. So, I don't know what happens to the generations after that, but I'm fairly impressed with the millennials, and they are becoming the big breadwinners in the economy. So you have to follow their patterns, right? You have to understand what they're investing in and how they're behaving and what they're really doing. Now, back to M2, you can see that it came down here
Yeah.
recently, right? We have not been printing money for the last couple of years. We actually just started again in May. So, you had this big spike. It never had come down like this before, right? It had never come down like this before. And everybody says, oh, that's going to cause a recession or depression. Well, but the thing is, it never jumped up like this before either. So we are basically
Plenty of
close,
liquidity.
and we're close to the trend line. So ultimately, money supply has to start going up again, and it is. So if you take a look at what the Treasury did in May, what are the two things they did in May? Most people can tell you that they cut back on quantitative tightening, but the Treasury Department, at the Fed, and the Treasury Department started a buyback program at $15 billion a quarter, so small change. But they just doubled it to $30 billion on August 1st. So you're going to see more Treasury liquidity, and the Republicans in Congress yell at, Janet Yellen, say, "Oh, you're trying to juice the economy." No, this is part of a long-range plan to get through the dependency problem that we're going to have that's starting about now and is going to run into, sometime into the late 2030s. So we're going to have roughly a decade, maybe 15 years, where we have to find ways to pay the bills. And Japan did quantitative easing for 30 years. We're probably going to have to do it for 10, maybe 15 if we decide to spend money on vacations. So I think that it's important to understand all these different things. If you go over to Apollo, and they have a chart in here somewhere about the correlation of liquidity to the stock and asset and real estate markets, and I think it corresponds to Bitcoin too. Is one, we don't really see any reason why people would be afraid of recession. The unemployment rate ticking up was entirely new people in the workforce, a combination of people running out of their COVID money, and I have that chart right here. So people started running out of their COVID money, pretty dramatic, right? And now they are coming back to the workforce. Plus, you have immigration, right? We had 4 or 5 million new people into the workforce, and that drove inflation down. So there was a huge benefit from inflation on inflation from immigration. And what we can see is that job cuts are not going up, right? You're not seeing big layoffs that aren't offset somewhere else. So we're not seeing a big uptick in layoffs. Now, if this number surges up and gets to that 100,000 range, then you should be concerned. So you don't want to see this break out. Now, if it jitterbugs in here, no big deal. But if it breaks out, then Houston, we have a problem.
All right, so Kirk, tell me how you're positioning yourself for this narrative you've presented today.
I think that the liquidity that's coming is huge. I think that it's going to be a combination of the Treasury and the Fed. And with more liquidity, you should be buying the dips on the best stocks. And you should be, bonds suck. So just, I bought 2 and 5 year treasuries a few months back. I'm selling them now, and I'll be selling them through the end of the year probably as we get opportunities to buy. But this is a chart that if you're a stock person, be aware of. Every quarter we have that buyback blackout, and it's about to end in 2 weeks. So we're
I
going to
see.
start to see big corporate buybacks for the
Yeah.
cash rich companies, which are basically QQQ and a dozen others.
So you'd
So
be looking to buy this break in QQQ. And
absolutely. I,
okay.
I already nibbled in once. I told everybody on Saturday morning that the blow off bottom might be Monday morning. It
Okay.
seems like that's what happened. Um, it doesn't mean that we can't jitterbug around for a few weeks. Historically, and I wrote this article over at my website, Fundamental Trends, is historically, and you go to it's in Trader's Almanac. You can see that during election years, Q3 is choppy every time, every time. So we were pretty much ordained to have a choppy Q3, the combination of the election and seasonality and having a big first half of the year. And now we're getting some consolidation in the stock market. And I think that's all it is. I think the Fed might be one meeting behind on rate cuts. I honestly thought that they should have cut rates over the winter when inflation started to come down, but they held off. So we will
Yeah.
see. Um,
But
we'll see. We'll
everyone
see.
keeps
They're
talking
close.
about the Fed, Kirk.
Yeah.
I mean, the 10-year has gone from 440 to under 380.
Yeah.
So I mean, the market's not waiting for the Fed. The rates have already come down dramatically in the 10-year. So
Right.
the market's operating in the basically the same level it would be if we had a half a point cut. It's already priced in.
Right. The big guys with the
So it's
big
priced
money.
in. Yeah.
Yeah, the big guys with the big money.
So why
Warren
is the
Buffett.
market ignoring that? Why is it ignoring lower yields and actually help propel lower yields? The
Because
market.
that's what markets do, man. I mean, the long-term rate is relatively anchored in a narrow range, right? From three and a
Yeah.
half to five and a half. And you get these narratives that drive it. And the big guys, they were buying these bonds months ago. Warren
Yeah.
Buffett was
Sure.
buying these bonds months and months ago. He's the
Uh,
biggest holder of 2 and 5 year treasuries. Do you think that with his 277 billion in cash and his bond portfolio going up, do you think that he's not selling those bonds and turning around and buying the dips on stocks? I would
I,
posit that Berkshire Hathaway, you're going to see them spread their bets. I think
okay.
you're going to see them get into the mid cap market, a lot of smaller bets, a wider range of them, because it is easy to identify with a screener, any simple screener. You can find 100 companies that are growing at over 10%, that
All
are
right.
starting to see free cash flow yields go up, and
All right.
they're just taking the place of the zombie stocks on the S&P 500 over the next 5 and 10 years. And
All right, Kirk
there's
Spano,
200
bullish
of
on
them.
this break. Let's wrap it with something that's not as much fun as making money, and that's making war. Now, you used to talk about Iran being on the table a long time ago, Kirk, and
Yeah,
sometimes things have a very long fuse.
right.
What do you think is going to happen?
Uh,
I know
you
you
know,
think you've been. I think about you when I see this kind of news, and I say to myself, I wonder what Kirk is thinking when he's watching this.
so I think that Iran probably does something stupid, and Israel and the United States blow a whole bunch of things up. I think that it changes the dynamic on oil because right now Russia and Iran are cheating on all the sanctions, which is fine. I mean, honestly, there's there's good and bad on all this stuff, right? But I think that you're going to see oil get tighter for a very short period of time.
Gotcha.
Ultimately, the energy transition happens, but that takes a lot longer than I think your energy transition bulls think it's going to take. I originally thought that the energy transition could be largely accomplished by 2030. It's going to take longer,
Okay,
and
so we're vulnerable to an oil shock if there's
absolutely,
anything that happens in the straits. And you used to, I know you have a new persona, but you used to talk about this as being, something that they had on the U.S. government has had on the table for a long time. So, their Netanyahu is helping them dust it off.
Yeah,
And it sure looks like Rand says they don't want a war. And,
baloney.
no one wants a war, but we keep escalating towards war.
But Iran doesn't want a war that they get shot back at, right?
Yeah.
They've been engaging in war for 4 decades now, and they just keep expanding it throughout the Middle East. And so I was at the Hard Energy Conference, and so you wanted to open this can of worms. I'll tell you what I heard there is the ex CIA director, the one that whispered in George W. Bush's ear. I forget his name. It's Mike something. He said he wouldn't be surprised if there was a terrorist attack on the United States before the election. And the room got quiet. And that is a product of largely the Iranian backed terrorist organizations, but also, we know at this point.
You mean the ones that posed as seeking sanctuary when they were coming across the border that are already here? Them?
I don't know what you're talking about.
Well, I mean, there were sure certainly were a lot of people coming through a porous border
Yeah, but
for that to be feasible, right?
no, I mean, we've had sleeper cells here for decades, right? I
Yeah,
mean, that was stuff that went back, you know,
yeah,
to
9/11.
blame recent problems on recent events is I think naive. The idea that immigration has suddenly changed the nature of the country to in a negative way belies centuries of history. Look, we've had the bad guys here for a long time. The bad guys have been everywhere for a long time. And it's not just Iran backing them. The disaffected people in Saudi Arabia who don't like the Saud family back them too. So they're all over the place. And what we need to be aware of is that for short periods of time, bad things can happen. There's no doubt about it. I expected this surge in volatility. I can't do it in my customer accounts because I'm regulated, but in my personal account, I owned VIX calls. You know what? I closed those on Monday morning. So I made 600% on that trade, 700% on that trade. So you know, blaming immigration or blaming this or blaming that. Look, it's a much bigger, slower moving thing that people want to attach a narrative to. And do I acknowledge that there can be another correction between now and whenever? Yeah, absolutely. There's always a risk of an event driven thing. And
Okay.
somebody in the chat says, I'm not worried about a September, October plunge. No, I think you're seeing it right now. And as the buybacks come back and as liquidity gets added by the Fed and the Treasury, that's not really the problem. And the idea that if Harris wins, things go this way, or if Trump wins, things go that way. Yeah, over a longer period of time, that's true. I think that the Trump trade is stagflation. I think that the Harris trade is energy transition. And ultimately, the dollar gets a little bit weaker for a little while to push asset prices up so that we can afford the baby boomer retirement. And these are all the things that the big rich guys already know and they're already responding to and they're already investing in. So, you know, I think it's more important that you look at the big picture. And if an event happens, well, you just have to wait it out sometimes. And if you can trade it because you see it a week early, God bless you, make a bunch of money. But, the reality is that most of this stuff is slower moving. Most of this stuff is forecastable out. I thought that there'd be an Iranian conflict. They've been much more savvy with how they've affected a quiet shadow war for a long time,
Yeah.
and we haven't found a spot where we kill the Ayatollah Khomeini. We're just waiting for him to die because we're hoping there's a revolution when he dies. I mean that really is the policy. Is yeah, this dude's got to die someday. And what is he,
Well,
185 now? So we're
yeah.
waiting.
I thought one of them already died.
well, the main guy,
Khomeini.
the Grand Poobah is still around,
Yeah,
isn't he?
I don't think so.
Yeah, his kid
Any
isn't in power yet.
okay. All right. Well, Kirk, people are going to want to. I know you do a lot of writing. I'm not sure. Do you have a website? I know you manage money as an RIA. How do people get a hold of you?
I am trying to find that for you right now. There it is. Hey. All right.
Po-
So my investment letter website is Fundamental Trends. If you actually are looking for a money manager, it would be Blue Mound Asset Management. And that is at bluemoundam.com. But for most folks, the investment letter is the way to go. I do not cover futures, so that is I think that makes me a good complement to ForexAnalytix because I think I know I've got a number of people that for my service over at ForexAnalytix. Um, I cover stocks and options. And honestly, I have become a massive Bitcoin bull after being very skeptical and just trading it for years. But it is clear to me that Bitcoin I've been finishing everything with this. Look, Bitcoin is still going not just 100,000. I can't figure out a way that it doesn't go to 300,000 just on international adoption
Webinar online.
as a currency hedge. Ultimately, if we ever start buying pizza with Bitcoin, it goes way higher. But you're already seeing it as an international currency hedge being adopted by nations, and and it is starting to be used in a handful of international settlements such as oil. So there's a lot out there that I think that you can make money on.
Okay, Kirk. I appreciate being able to hear you today. It's
Yeah,
been a
thanks for
bond.
having me on. I look forward to these. I'm
Yep.
sorry that I missed the last one.
Oh yeah, it's okay. You didn't have to bring a note from mom. You're human. So we'll talk in the fall again, see how things play out. But
Yeah,
you
yeah,
do, but you do, your demeanor, you do calm down what a lot of people worry about. So, it's kind of like a virus of worry out there, you know.
yeah. Well,
So,
bad things happen. However, you always got to go back to the first principle. The United States is a pretty good place, and the economy is pretty strong, and we recover from everything. We still are in a position to print money. Does that last forever? I don't know. I mean, we got pretty
yeah,
good geographic advantages. I don't think it changes this century, not in my lifetime. So,
okay, cool.
understand the big picture and what they're trying to do. They're trying to not have a debt crisis,
Yeah,
and
of course.
they're growing assets is the best
I
way
hope
to.
they could, I hope they're successful.
You don't think they'll be successful?
I hope they are. I
Oh, you
don't
hope they
know.
are.
Yeah,
I
I
think they
mean,
will
I
be.
don't have tremendous confidence in
It's,
um, the way the Fed has managed things.
I think they've done a pretty good job. I will
All
tell
right,
you
all right.
that I will tell you that this has all been part of a bigger game. I think we overspent on COVID,
Yeah,
partially to offset the boomer crisis. And I'll finish with this: if we start doing austerity, everybody here should become a billionaire because that'll be the easiest take everybody else's money trade in the history of the world. So if they do austerity, we will get a massive collapse, and you should be able to short the hell out of everything and buy volatility and gold to the moon and Bitcoin to the moon. Because when they reprint money, when they realize they screwed up, it'll
yeah,
just be the biggest spike crash and spike that you've ever seen. I
yeah.
don't think
Maybe
it's
we.
going to happen.
Yeah, okay. It's
I
just
don't.
gonna
I don't
be.
think that'll. I think you should get used to President Harris, but we'll
Oh
see.
yeah.
We'll see.
Okay. All right. Very interesting. Appreciate it. Kirk Spano, everyone. Find him on the X at his name at Kirk Spano and check him out. He also has a very good technician with him, a friend and former mentee of mine, Scott Henderson. Scott's a great trader.
This is his chart right
He
here.
does. He's insatiable. about his work and check him out. So thank you, buddy.
Have a fantastic quarter.
You too, man. Really appreciate the views. And we'll talk in October.
All right, take care.
All right, Kirk Spano, everyone. We went overtime for you. People are thanking you, buddy.
All right,
So
take
watch
care.
him. He does a lot of talks on X. I always see him out there. You could just jump in.
Yeah, stocks
Eh,
on
eh,
spaces. Wolf Financial. He's got a pretty good. I would say Wolf Financial has impressed me. He's one of those millennials.
Yeah, he should have me on. I'm a
I will
boomer. I
tell him.
won't be
I will
around.
tell him.
I won't be around that much longer. Anyway, so I'm the end of your story. I'm the end of the beginning of your story. So thanks, Kirk. Everyone have a good turnaround Tuesday. I still think the markets are in shock. Takes more than one day for dust to settle. Keep an open mind. It'll keep your account open. And above all, don't just count your pips, count your blessings. We'll see you tomorrow. Adios. Thanks, Kirk.
Take care.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.